following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. In the words of Major Mortimer Duke, when he was down on the floor of the Orange Juice Exchange, when they were trading orange juice, he said, sell, sell, sell. Get me out of that position. Folks, these are the kind of days that are dangerous to your wealth. Only listen to about 1/3 of what I say today because I'm a little too bearish. Some of God's greatest gifts are unanswered prayers, and I've been waiting for this blow off. I thought we were going to get it on the 8th or the 9th, but I think we got it to the 10th thanks to Mr. Mario Draghi. And they've made rates down to 0. I guess they'll go to -0.5 next month, but we'll wait and see what's happening. But boy, we've hit up some big numbers here. We're going to start out, yeah, we sure did. We hit that 20-man line spot on in the silver. We made a lower low in silver, exactly right below the 1520 level. We hit 1517, and that thing was trading at 1537 faster than you could bat an eye. Jumped 20 cents. Gold jumped quite a bit. Now, what I want to do is try to explain to you what's going on in some of these markets from a technical basis, but frankly, folks, I don't know diddly squat about the fundamentals. But let's start out here with the gold market. We've been watching this market possibly making a high up here. We came down yesterday. We hit spot on the 1244, 1245 level. We rallied $17 up to the 382 retracement. As most of you know that it follows some of the work that 20man and I have done. 17 and 34 are the harmonic numbers in the gold market, and it went right up to that level and then started to sell off. And today we broke down and we went from 1260 down to the 1230 something and change, which was an exact 786 retracement of the low from March the 2nd. So this is, and then what do? We rallied $17 up again today. So if we can get gold above 1260 today, that will tell us that this is nothing more than a 3-day correction, and we could be getting ready to look at something a lot higher. But this is what we're watching in the gold market today. There's so much stuff going on today, folks. I could probably, do a show that would last maybe 20 minutes instead of 5 minutes. The next one I want to show you is from our good friend John Murphy. Basically, what John is showing here is the fact that we've had a situation where we've had many of the stocks are above their 50-day moving average, and you see that has taken out the high from last July, and that is a very unusual thing. That is very bearish from a standpoint. As you can see, what happens when we hit these levels, they act like an oscillator. But if you look at this chart really closely and look at it from August to where we are right now, you'll see a perfectly symmetrical ABCD pattern. It just can't get any more beautiful than that. And, that's what I'm watching. Now, the next one that John was kind enough to send to us was the one with the advanced decline line. And here again, we're going to be looking at a market that is incredibly overbought. And we'll be seeing if this is going to be the case or not. You'll see that we have lower tops in here, but we are in a very strong situation where the advanced decline line has jumped up quite a bit. I mean, the one thing, folks, we made that beautiful ABCD pattern down there on February the 10th with everything. I mean, everything was bottoming there. That was flat out a no-brainer. Now we're coming into this time frame, and this is a very big cycle. It's a new moon. It's a solar eclipse. Eclipses don't mean too much, but the new moon certainly does. And yesterday today's the last day of it too. So we only have a 1-day orb on this. So this should be it. An orb means how many trading days it could be, either high or low. And you got from the 8th to the 10th, and you'll never guess what today is. Today's the 10th. So we'll keep an eye on that. Now, there's one other one that I wanted to share with you, and that is, just give it to me a second here. There we go. And this is the one, oh dear, what I did was I doubled it. Evidently, I only had two. Yeah, I only had two charts from John Murphy that I wanted to show you. Now, the next one I'm going to show you is the New York Stock Exchange. Oh, God, Larry, try to relax here a little bit. It's no big deal. It's only money. This is the Dow Jones E-Mini. And the number we were looking at, which was the 786 retracement, was 17,167. During the run-up, we hit 17,174. So that's a very important number. It's also a 1.618 expansion of the high from late January into early February, which also is important. We also have a very good timing cycle, based on the lunar thing. So this is what you look for, folks. You just can't ask for anything better than this. You might lose, but by golly, these are the kinds that you really like to see moving along. That's what's really great. I just can't tell you enough that what it looks like. And the bonds are holding up relatively well, given the fact you'd think the bonds would be in the toilet, but they're holding up relatively well also. Now, all of this is based on what's happening in Europe with the fundamental guys are looking at this because rates in Europe are going to zero, so that makes the euro very weak because it's not going to have any interest backing. And as you can see, we've been in a downtrend in this, and basically we were looking for prices to have possibly some type of a bottom at 109, and of course, when the report came out, it went through 109 like it didn't even exist. It went from 109 to 108.60 without even an uptick. It was just a total collapse, and we went down, and we've stopped at the 108.30 for now. That's been the three drive bottom that we had back on March the 2nd, and that might hold it for a little bit. But overall, we've been watching the euro for a very long time now, and if you'll take a look at it on a longer term basis, just looking at the daily chart, if you'll look at this, you'll see that you'll be able to see what the thing is doing. And I don't have prices up to date because the only way I can do this show is to print the charts out and show them, because if I try to do it, there's too much data stream coming in and it messes up everything. So basically what we're looking at here in the euro is we're heading down towards that 104 level, which would be the ABCD pattern. That would take out that old low from December. But the long-term weekly chart in the euro still sets at 99. And I don't know if it's going to have anything to do with the British thing or whatever, but that's what it looks like to me. This has been in a downtrend. You've had some really nice moves to the downside. So frankly, that's what you should be looking for. I think the focus today should be looking at the, we'll see what happens, and we'll just go from that, and we'll just go from that level. Anyway, all right, let's see. What we got here is the, hold on, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we're going to be looking here at the XLP, which is the actually what it is. It's the consumer staples. And the reason why I'm bringing this up is hopefully it's posted. Maybe it didn't post. Let's try it again. We'll see what happens here. Here we go. We'll give it one more shot, and then we'll call the techies and see if that'll work, see if this will come up. Okay, this is the XLP Consumer Staples ETF. Folks, if you like pattern recognition, you're going to love this one. This has got more patterns in it, and they're so beautiful that it's really hard to disassociate patterns with some of this stuff. I don't know diddly squat about the fundamentals, but all I can tell you is you've got a 1, 2, 3, 4, 5 expanding triangle there. You've got a 3 drive to a top pattern. You have a butterfly pattern. You have 3 ABCD patterns. If you can't sell it here, you should just head off to the old end of days nursing home and start sitting in your rocking chair and having your tapioca. And believe me, tapioca is really good when you don't have any teeth, folks. Trust me on that one. But this is really a beautiful pattern. Boy, it might not work, but boy, it's got everything in the whole world going for it. I mean, as far as the patterns, my goodness, it's really something. You know, I don't want to get excited about it or anything, but this is just another pattern. It looks very, very interesting, and the good part is you don't have to risk very much at all. If it gets much above 150 or above 54, I'll certainly be wrong. It might even open at 54, as crazy as this market's going on, but we'll have to see if that's going to happen or not. Now, we've had a special request to talk a little bit about natural gas, and if you'll give me a second here, I'll bring this chart up and we'll take a look at it. I finally figured out how to do some of these things. I put them in a file, so I've got them in order, and I'll be able to look at it. But this is the natural gas we looked at several days ago, last week, as a matter of fact. And as you can see, we did make a bottom down there. We didn't quite get to the 1.27, which was what I would really like to see, but we've had a pretty good rally. We rallied about 13 or 14 cents in natural gas, which is not a lot. So what I'm going to be watching is to see what the pullback will give us, if in fact we do get one. That's the bottom line of what I'll be trying to do here in the natural gas. But it's very, very close to a pretty good bottom. In fact, we might have already missed it. It did get down to that 161 level, but we have still waiting to see if we get further confirmation of what's happening with the natural gas. Now, I wanted to I've covered the euro. I've covered the the one thing I wanted to mention to you. I got these things marked wrong. Just a second. Doggone it. Even I put them in file, I still get them wrong. Give me a second. I wanted to show you what happened last night in the here. This is what I wanted to show you. This is the E-Mini. I wanted to show you what we were looking at here last night in the E-Mini, because we had a situation where the market was on its way up. It looked like it wanted to go to 1201. And then, of course, Mr. Draghi came out, and that just accelerated the market. And we took out those highs from March the 4th. And that's really key from my point of view, folks, because I look at the work of the astrology stuff on the full moons and new moons, and they're very good. I mean, they're not perfect, but boy, when you got these when you got these numbers coming together at the same time that these cycles come together, you got to pay attention to it. I say the word boy all the time. I have to tell you a funny story. I was in Atlanta for Eli Lilly in 1970. I was setting up a research grant for the cephalosporin antibiotics at Grady Memorial Hospital, and I was getting in the cab from the airport to go to the hospital. It was raining like heck, and I got in, and I says, boy, is it raining. And the cab driver, a black gentleman, turned around and grabbed my tie and shirt, and he pulled me about halfway through the window, and he says, don't you ever call me boy. And then I didn't realize that, being from southern Indiana, that was not the thing to do. But after a little talking, he finally let me go. We got a call from Mark in Boston. Thank God, Mark. How are you, my friend?
Very good, Larry. How about yourself?
I am good.
Good. Well, I have listened to you for quite a long time, and you have my utmost respect, Larry. You have. Well,
I'll get that $20 to you just as soon as I can, Mark. But thank you for the kind words. I certainly need them today.
Oh, come on now, Larry. I was calling about a friend of mine is going to be trying to transfer some money. Now, and I don't trade currencies, so. Mm-hmm. I was wondering if I can get a little expert advice from you as to direction, what you think over the next few months of the pound versus the dollar.
Okay, my account number is 06693482291, and it's at the Chase Bank. So if you'd put it in that one, that would really be safe.
Good,
and Mark, it's really hard to do to move money around like that. I'm a firm believer that the U.S. dollar is still a pretty good place to be. I'm not so much concerned about the return on my money as I'm concerned of my money. And so I don't know how much it is, but if it's a great deal of money, I would say that to just hold pat and not worry about interest rates or anything like that, and just keep it relatively. If we get the pound down to about 135. I would buy the pound, because we've looked at Jim Bartolione's work on that, and from 1985, that 135 level is it's very, very interesting. That's equivalent to about par in the euro. So that's pretty much what I think. Is it a lot of money that he's talking about in 7 digits or something, or what?
No, he's going to be living here for a while. So it's just going to be a process of transferring money over, a little at a time. And I was just curious as to the direction, pound versus dollar, and just try to maximize maybe when money gets transferred to put a little more money in your pocket, a little more spending money type thing. That's all.
Sure. I'm going to put the British pound chart into the room today, and you'll see that if we do get down to that level, that's something that he might want to do. But if he's just here visiting and everything, just have him enjoy himself and, not having to worry about it. Everybody wants to make a buck, but nobody wants to take the risk involved with moving currency around. I had a gentleman last year, 3 years ago, we were in Hong Kong, Sarah and I. We were giving a speech, and the gentleman that invited us to dinner, we went to this 35-story building with his name on the building, and he owned the whole building. And there were like 5 restaurants in the building. We were one of his restaurants, and he's a very, very cordial man, extremely humble. Has 6 kids that just absolutely drive him nuts because all they do is spend his money. But he asked me where to put his money, and I just said, if the Swiss franc gets down to 85, I'd be looking to be a buyer. So he had an open order on the day that the Swiss did the thing with the euro. And of course, it went from 85 to 75, and it was back above 85, and it went to 120. And he thinks I'm a genius. And I told him, I said, that was just a flat out lucky guess. I didn't think it could ever get there, but in fact it did, and he was rather happy. But don't be concerned on something like that when you're traveling. It's not worth it, Mark.
Okay. Very good.
Hey, thanks for calling in. I appreciate the kind words. I love the Celtics and Larry Bird.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart into Tiger TV showing the 20-man line there, how we took out the support at the silver at the 1920 level. We went down to 1917 on a fast tick, and believe me, folks, I am really talking fast. This thing went from because I happened to be involved, and I got very lucky on that one. But I couldn't believe it. And now I see it's trading up in the 1550 area. So that's a good sign if that's going to be the case. The gold was impossible to trade down there because it hit 1238 and was trading at 1248 faster than a rabbit could run from the fox. So it really is really harder to trade that. Usually silver is the crazy one, but today gold happened to be, and I see gold got above the 1260 level, which was the level that we were looking at. Remember, folks, we went, the harmonic number in gold is 34. So if you take the low that we had down there at 38, you add 34 to it, you're going to get to 72. We get above 1272, and I don't think you're going to see that 1238 for a long time if it happens today or to market. Gold has a chance to have a heck of a run here. It has a chance. That's all I can say. But to remember, the number back is going to be interesting too, because we made a high of 1882, correct? And we went down to 38. So that is what, $46? So 46 on the rally back from that will be about 25. Let me see, 45. Well, we got a chance here for gold to really have one heck of a run. So we got to watch it very, very closely. And here, that's the key to watch it. So we got stocks are opening now. We're opening sharply higher as expected, but not nearly as high as they thought they were going to be at one time. We were up 100 and some in the Dow, and now we're only up about 30. Remember, it takes the Dow a little while for the stocks to get running, but we'll watch that very close. We have to give our friend Mr. Z in the room and some of the other guys that were selling the S&P at that 2008 level. My hat's off to them. I think that's that's showing the fact that they understand the ups and downs of some of these things, and they were capable to come in there. They said right in the room what they were doing. There were three people. There was Mr. Z and I think Peak and RJP. I don't remember the exact handles, all of them, but they were all looking at that level, and it's dropped 15 points, from that spot, which is if they were really kind, they would put that into my account. It would make me very, very happy. As far as the grains, what we're looking at here in the grains, we're looking at a situation where we're down very, very slightly today. I don't has anything to do with this thing that's going on with Mario Draghi or anything like that. But we are making some type of a pretty good bottom here in corn, wheat, and beans. So on any weakness, I would, have you folks take a really close look at those, because they've got a chance, to be really something, quite splendid if they can, in fact, continue to do that. We have a lot of seasonal tendencies for the grains to rally right after we get the planting intentions and things like that, which will be very, very important to watch. And we'll keep an eye on that also. One of the things that I think that we have to be interested in is the fact that we're having this huge rally here in the euro. I just realized this. My goodness, this thing came off. It's rallied 200 pips. Oh boy, this is strange. I'm watching TV. That's how I'm getting the prices. I can't believe the euro's rallied that much. Holy moly, guacamole. That's went right down to that 108 and 30 level, which was the old low that we made back on back several months ago, several weeks ago, and boy, it's rallied one heck of a rally. That's they're basically telling Mr. Draghi to go fly a kite. That's what they're telling him. So maybe that's true, maybe that's not. I don't know what it is, but we'll see. I wanted to give a quick review of what I think is happening long term. And I'll just have to show it to you, because this is what I believe in, and this is what got me to the promised land. And we'll put this puppy out here, and we'll see the. This is a long-term monthly. That's the 1, 2, 3, 4, 5 reverse point wave that we've had. This looks very similar to what we've shown many times in the New York Stock Exchange Index, and this is our chart from our good buddy Jim Bartolioni, and you'll see that we've broken down. We've had the rally back, and all we've done now is we have completed, as of today, and this is the daily Dow Jones Industrial Average. And if you'll give me a second, I will put it up, and so you can take a look at it. And as I mentioned before, we hit the other one out at the other side. So we'll see if this is going to be the case or not. We'll have a lot of jumping around here early this morning, and we'll see what's really happening. But these are the kind of things that you try to have happen. You like to see the volatility that you have after these reports, because emotionalism is what makes these doggone things really makes them so very, very exciting. So keep that in mind as we're watching some of these things. I would appreciate if someone in the den would tell me what the last price on gold and silver is, please. The spot options, April and May. That would really be helpful, because I don't have prices and they don't show them very often on CNBC. 1263 in the gold, and that's very good. Thank you, Steve, and 1552 in the silver. Thank you very much, gentlemen. I appreciate it. And we'll see what's happening with some of these other things. But we're having good volatility. This is ideal for what we look at, folks, from pattern recognition, to get these things up in this area. And we'll be watching these really important. That XLP chart, that consumer staples, that you could write a textbook on the technical analysis by looking at that chart, folks. That's just as it might not work, but boy, it's got everything that you could possibly ask for. In fact, when I did this last night, I said, "Holy cow!" I said, "This is just." Too many things that are so perfect. Those are the ones. Because when they fail, oh boy, look out. And if the market closes really strongly today, like up 150 or 200 in the Dow, and the S&P closes above 2010, which is certainly a possibility, then you'll be looking at another leg that will take us up to roughly that 2030 to 2040 level. But with this lunar thing overhanging us today, I think this is what's caused it. Mr. Draghi's announcement was the thing that gave the oomph to it, but that's the bottom line of what we're watching. I wanted to show you one other thing about the number sequences that we look at, and this takes us across the pond over here to Hong Kong, and I'll be leaving for Hong Kong next week. I'll be there for a while, giving some talks, and also visiting some of our good friends and students that we have over there. But if you look at this Hang Seng, look how just in over a 5-day period, it went up exactly to the 786 retracement, to the exact tick. It came down to the exact 786 retracement, to the exact tick. And this is an hourly chart. And the expansion that it made up at the high, which was at the long-term 382 number, that was also a 1.618 expansion of the range from the 2nd to the 3rd of March. So these numbers, even though they don't work all the time, they do have some bearing on some of these things. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, Billy Ray, looking good, Lewis. Let's take a look here at one of the stocks that someone has asked us about, and that stock happens to be Caterpillar, and we're going to bring it up and take a look at it. We've had a pretty good run in Caterpillar after we had the butterfly bottom down there at that 57 level. We made the ABCD structure. It missed the 61% retracement by about a buck. That should have been around 76.80. We got to 75.80. Then we backed off a little bit. So if you get a rally here in Caterpillar, I would take a look at that from the short side, because this is in a bear market. It's had a very good rally, and I think that this is a spot where you should probably take a look at this from the short side, just from looking at it from the cheap seats here in Tucson, Arizona. So we'll see what's going on with Caterpillar. One other question that someone has asked me about, and that is the neural net prediction that we had from our friend Larry Edelson. And I wanted to bring that up and show you what it looks like. Remember, folks, these neural networks, they're very good. This is I'm sure it's a back propagated neural network, because he reran it to get back data to understand what's happening, and that's pretty much what it is. It's just a new forecast based on more data, and that's what happens when you do a back propagation. You'll be able to pull back other data to see if something's changed a little bit, and that's what it's looking like. So pay attention here, because if we get above this 1282 level, there's nothing up there about nothing but blue sky and gold. And if silver takes off, heaven forbid, if we get silver somewhere above the 1620 or 1650 per ounce level, we could be looking at potential breakouts in those also. And remember, we're in the era of funny money now. I mean, they're just trying to propagate something that's never been done before. And usually stuff like that does not work very long. Bernanke, when he did this experiment, basically was playing with the 4.5-year business cycle, in my opinion, and that's what's been skewed. And I think that will come back and haunt us to no end. So whether that's going to be the case or not, remains to be seen. So gold forecasts like this, when they work, they're really good, and when they don't work, they certainly they don't work. Let me go through those fib numbers in the gold again. We hit a high of 1282, and we hit a low of 38. So that difference is 42. It's 42. So the 50. If we rally back more than $30 in the gold, that would take us to 12. If we get above 1268 in the gold, then we would be looking at something that could be, really, really positive, especially on a big, wide-ranging bar. And we'll see if that's going to be the case. Now, the question that I have is, what is the last price and what has been the high in the gold for today? Could someone please give me a price on the April gold, just see how close we are to some of those numbers, because this is the type of day that you get a really good move. Everybody is asleep. It's 1262. Thank you very much, Mr. Z. And we'll see if what has been the high. 1264 has been high. That's just about it. 1264 would have been the 61% retracement. And if we get above the 1268 level, that would tell us that this is a big reversal day in both gold and silver, and particularly silver, because it hit that 20-minute line just spot on right at that level, and it was acting friendly even when it was going down. It didn't go down nearly as fast as it used to go down. It was quite a bit. Now, we've had one other question to take a look at here, and that is the chart on IBM, because we've had a really nice pattern when we're rallying in good. We're already starting to move in the gold. That's terrific. We're glad to see this. Okay, now we've got the IBM. We're looking at IBM making a retracement here. There should be some pretty good resistance at this 140, 141 level. I don't know if it's going to run away from this level or not. The problem is, folks, this is just a retracement trade all the way from February 10th to where we are right now. You don't have any ABCD structure in here. It's just been a straight up move, and we could easily make 145 in IBM, because that's the 786 retracement. I have no idea where it's trading right now, but that's what I would be doing. I have no interest in this because there's not a lot of patterns. There's just a couple of ratios here. When you look at that XLP trade, you got more ratios there than you could possibly even think about. And those are the kinds that you'd like to, those are the ones that you've got so many things together that tells you that's pretty much where you are. See, IBM's, thank you very much, Mick. IBM's trading at 101, at 141, so it's still right in the zone to be a seller. If I had John Logan's money, I'd probably sell the IBM here, because I know that's his favorite stock and he likes it. So I think I'll have to sell it short. That's sort of a joke now. I'm just trying to be funny here to get a little bit of humor into the room, but it's not working very good today, Billy Ray. It's not working very good today. Okay, we had one other question, and then I'm free to tell jokes the rest of the time, and that was, hold on one second and we'll get it ready here. That was in the, oh, darn it, where is it? Oh, the British pound. Okay, this is the British pound. I wanted to mention to you, this is what we were looking at from looking at the hourly chart. Oh dear, just a second. I got to move this around just a bit. Just a second here. Hold on, folks. I'm having a little technical difficulty. What is this? There we go. I think we got it fixed now. Just a second. You can't. Got this moving. You can see on this British pound yesterday we hit that 142.80 level, and that was nothing more than a 3 drive to a top pattern. Then we had the big breakdown, which held pretty well. So we'll see if this is going to be the case, and we'll see what's going on, with the British pound. The interesting thing is the fact that the euro was able to rally 200 pips right in the face of this. I don't know if we took out those lows from last 3 weeks or not, but if it took those lows out and didn't go anywhere, that would have been the first sign that something really significant is happening. But we've had a pretty strong opening in the market, and it's held relatively well. We're still up about 70 in the Dow, and S&P still up quite a bit. Let me see, we're only up about 10 now after we got down quite a bit. So we'll see if this is going if this is going to be the case, and we'll go from that level. Anyway, let's see. We got the gold has got up to how high did we get? We got up to 1267. That would be that's the upper end of that band. If we get above 1268, that would tell me that we've got a chance here for a pretty good rally. If we can, get it above that level, that would give us a pretty good shot at something, very, very significant. This is without doubt a very strong cycle day, folks. I don't think there's any question about that. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a pretty good swing. The Dow's moved up 160, down 160, and now we're rallying back. We're going to see what happens. We've had a very, very strong rally in gold. We've went from 1238 all the way up to 1265. Remember, 34 is the harmonic number, so you add 34 to 38. If it gets above 71, boy, look out. Gold could really start to rock and roll. So, keep a sort of a close eye on it. Those of you that are watching the E-Mini S&P, one of the things you might want to consider is the fact that, we dropped from 1209 down to 1289. We dropped 20 handles. So if we rally back to that 2002 level, that would be an area which should be some resistance. But, like you have to know, these markets have a tendency to run, quite a bit. So make sure you use stop protection, because if you don't, you're basically telling the market that you know more than the market does, and that doesn't happen very often. So just keep that in mind, that that's something that you want to to focus on. But this should be it in the stock market, because you've got that the last part of that lunar eclipse is, the solar eclipse is what we wanted to see, was this explosive move, and Mario Draghi has given us the reasoning behind it. So just follow along what's going on. Now, remember, the euro has already reversed everything. My goodness, I can't even believe it got up to 111 and change. Folks, that euro, I just happened to see it price level coming across here on CNBC. And if I just did a quick calculation from the previous high to that previous low, the 1.618 expansion of that took you above 111. And that is very, very wild action, because you drop 200 pips and you rally, wow, almost 300. It rallied 300 pips. Shut the front door and raise the rent. That's almost like the 500 pip move we had during the time when we had our first increase in interest rates. So keep that in mind also. So we'll watch this very closely. 877, goodbye everyone. Have a nice day.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.